Let's start off with the non-farm payrolls. It is all about that. Investors are waiting for these numbers, and it's something that happens on a monthly basis. So we're not new to all the investor jitteriness that has come to the fore. We are expecting non-farm payrolls to show that 110,000 jobs were slashed and unemployment increasing to 9.6%. Give us your view on this. Unfortunately, it is one of those numbers that really make or break the market.
Certainly, I think as we've seen in the market, the response we've seen so far is to yesterday's initial jobless claims that came out, which is a weekly number. But today, yes, as you're saying, it is the all-important non-farm payrolls number and unemployment figure. I think the market is trading cautiously at the moment. We are expecting a bit of like 100,000 jobs lost there. However, it could be a surprise on the upside. And I think what the market is really doing is waiting to see whether technically the market is going to move up or is going to move down. I think from a technical analysis, the market is sitting at a point where any breakdown to below current levels could signal a move in the top 40 to about the 22,500 level, 22,500 level, or should the numbers come out better, that will move us back up again to near about the 26,000 level. So really today is make or break. Cautious trading all around. Everybody just waiting for 2:30 for that number to come out before any kind of direction will be solidified in the market.
And Ntombenhle, we're seeing low volumes on the JSE ahead of that non-farm payroll number.
Absolutely, we are definitely seeing low volumes, but you must also remember that the northern hemisphere is still on their summer holidays, although it is towards the end of the summer holidays. And also the other big thing is that it's a long weekend in the United States. I think Monday is a day off, so so there will be some thin trading, and that I think is what's really going to cap the markets, whatever happens with the non-farm payroll numbers coming out today.
Well, in the US, we saw a better than expected ISM number. We're seeing a little bit of a tick up with the PMI number in China. It seems that fundamentals are starting to stabilize somewhat, but we're still starting to see quite a bit of nervousness. It seems that the US government has run out of impetus in terms of stimulus going forward. But then again, the markets have really been oscillating 10% higher and 10% lower, and we haven't really seen sort of any more than a 10% move to the up or downside over the past while. When you look at what's happening in South Africa, we're really at the mercy of what is happening in the US at this point in time. But looking at the fundamental drivers of the South African market, do you think we're in better stead? We've seen quite a lot of numbers coming out from big companies as well.
No, I think we're also suffering from that. We're so dependent on foreign trade and so dependent on what happens in Europe. And so if their growth is subdued, so will our growth be subdued. Next week is a big week. We've got the MPC decision on Thursday, which is very important. We've also got manufacturing numbers coming out on Wednesday, business confidence coming out on Tuesday, and I think the net reserves actually coming out also on Tuesday. So that will be also a report back on the current health of our economy. But yes, I mean, Joe Marcus did come out saying yesterday that inflation targeting for the South African Reserve Bank is not the only part of their mandate. They do have to consider economic growth and unemployment because their decisions influence that. And should there be a cut next week, I think what they'll be trying to do there is weaken the rand, because they build up of foreign reserves has not helped to weaken the rand, which affects our exports and affects the general health of our economy. So yes, we are so dependent on the international markets that whatever happens there will obviously reflect on our side.
Ntombenhle, we have seen various comments coming through from the Reserve Bank in the last couple of days. Do you think that it is signaling perhaps to an interest rate cut next week? Because it seems that there are a lot of concerns about the fiscal deficit as well. I mean, the wage demands that we've been seeing. So all of these things need to be weighed up. And the fact that we are starting to see a recovery on the retail sales front, but there are other factors pushing towards an interest rate cut in the country.
Yeah, I think, last time Joe Marcus did mention that, there's certain factors that would go into consideration whether there'll be a cut or not this time. And that was a strong rand, subdued growth or fragile growth prospects, low inflation environment, and a subdued economic environment all over the world. And I think those conditions have been generally fulfilled. We have seen that play out quite a bit. So based on what she said the last time, I think they will actually cut. She was cautious yesterday in leaning either way, but I think generally the market has already priced it in because of the current economic conditions in the country and in the world. And I think the expectation is that 50 basis point cut is going to happen next week Thursday.
Well, all of this happening, the rand has been very strong. We saw it trading at 7.22 just a short while ago against the dollar, but then again the dollar is coming under renewed pressure. We're seeing it at 15-year lows against the yen, and of course the euro also taking a bit of a knock against the Swiss franc. So we're seeing interesting currency plays in Ntombenhle, but also just looking at the gold price, because some of these gold miners have come under renewed pressure. We saw the gold price taking a little bit of a knock in yesterday's session, but we have been seeing it hit new 2-month highs over the last couple of days. Do you think it'll hit that $1,265 an ounce level, that all-time high once again? And what impact do you think the currency market is going to have on the gold price, and also the fact that the rand has been so strong, so perhaps the rand gold price is not going to be performing as well?
I think the rand has really defied all expectations. It almost seems to ignore the fact that there's strikes, that there's political turbulence in the country, and it's just risk aversion is coming back. Less risk aversion is in the market, and so we're seeing that translate into our currency. As far as gold is concerned, it's still a safe haven, and it's trading very, very close to the 12,056 level that was hit in June. So it's trading very close to there. So it's still safe haven, and is still bid on gold. But we've seen also the ETF, large gold-backed ETFs, the demand come off a little bit there, but also still very much bid. And I think what we'll see there from gold, depending on what the number is today and the non-farm payroll number is today, we'll see it either continue on its strength and surpass the past highs, or we'll see it come back down again to about the 1,150 level or somewhere there. But yeah, it is interesting times. Our currency has certainly ignored a lot of things, and it's still bid, and I think it will be a very interesting time after 2:30 today.